What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see a continuation of the strong bounce as we continue to rally off of the recent lows. How much higher can we possibly go without a pullback? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we're up 1.17% and we did blast through that resistance level right around 446.5. which means we could be well on our way to the next resistance right around 453.5. Now the first thing to note is coming off of these lows, this is a very impulsive bull rally, and this is not something you want to completely ignore. Are we just going to continue to go all the way back up to all-time highs without a single pullback? Not likely, even though it does feel that way. These are exactly what happens during a FOMO rally, and this is usually what happens when bearish sentiment gets way too high when the stock market has made a significant low. Remember, as the stock market goes lower, you want to get greedy when everybody is getting fearful. And we did reach extreme fear readings and very bearish sentiment as we came in to retest this low at 416. And now we see a bounce that just isn't looking back. So if you're getting FOMO, that's completely normal. And if you're getting FOMO and you're thinking about buying at these levels, that's completely fine as long as you're using proper risk management. Remember that we did get confirmation of the bullish breakout when we broke through the resistance trendline, and now we're 4 days back over the 50 EMA, and we're starting to see all of these moving averages go to a positive slope after we reverse the bear trend. So without a doubt, this is definitely very bullish developments, but I do think you're going to get a much better buying opportunity if you're just patient and willing to wait just a few more days to see where we'll find resistance and start that pullback. So from here, the next obvious resistance level will be right around 453.5, and above that you're looking for the ultimate test of the bull market, which is going to be on a breakout and a close back above 457.5. Remember, you always need 2 daily closes above a breakout level to confirm it's the real deal breakout and not just a fake out. So remember, the bulls are going to be in full control of this market the next time SPY is above 458. But right now we still see bulls driving in the short term with a very strong short-term bull trend and making very significant bullish breakthroughs. So from here, if we start to get a pullback, you want to look for strongest support right around 441, 438, and our breakout level right around 433.7. Any of these levels could be the bottom on the pullback before we start the next leg higher. But in the event this was a false breakout, which I doubt it's going to be a false breakout, we're going to break back down through 430 and come all the way back down to retest 428. And if that level fails, you're looking for a significant possibility we retest the lows at 416. And in that event, it's likely that we break down and go close the gap at $400 on SPY. So yes, it is still possible this is a bull trap, but it's highly unlikely at this point because there is a lot of volume buying and there's a lot of short squeezes going on. And now the technicals are starting to favor the bulls, as you can clearly tell with the moving averages starting to develop a positive slope. So the bulls are starting to gain the edge, and you can clearly see SPY has a higher high and a higher low situation. So this is definitely going to be a bullish development, and you're starting to see market structure shifting from a downtrend slowly and surely back to an uptrend. So watch critical resistance because it's possible we get a pullback from any of these levels. And once we start to get a pullback, be patient. Watch the strong support levels and just follow the price action. Without a doubt, the trend is slowly and surely turning bullish, so the bulls will be in full control, and I do expect to see plenty of buyers of the dip out there. Just be careful not to get bull trapped in the event that this was all just a fake out. On the Nasdaq 100 triple Qs, we were up 1.97% today, and again we see another bullish breakout with the triple Qs closing above 356. So you're definitely seeing a bullish theme across the indices, and from here the next strong resistance level on the triple Qs will be right around 363 and then 367. Above 367, the triple Qs bulls are in full control, and we're very likely going to go back into a sustainable bull rally. But after such a strong push off of the lows, it's very likely we need to get a pullback before we see that sustainable bull rally. So from here, look for support levels right around 351, 347 and 341, and our 20 simple moving average right around 338. And remember, that is a positive slope, so it will go higher each and every day that we don't hit that level. The longer price action stays above the 20 simple moving average, the more likely we're developing a bull trend and getting ready to continue to go higher. And if we do get that breakout above 367, you're looking for the potential of a retest in the 390s. So that will be an extremely bullish breakthrough. So watch that level very closely and watch the pullback levels at the support, because if we don't hold up above the resistance trendline breakout, we could retest the lows. So the most critical support level will be all the way down here right around 331. Below the 330s, we're coming all the way back down to 318, and there's still the possibility we're closing the gap at 315. In the Dow Jones, we were up 0.78% today, and again, the Dow Jones had a bullish breakout closing above 347, so our next critical resistance level will be at 350. Above 350, we have resistance at 356, and then the full gap close at 360. Remember, the Dow Jones has that gap to fill, and that is a very good indication that the markets are likely going to continue to trend higher until we at least fill that gap at 360 in the Dow Jones. So from here, you can see the same theme developing a bull trend after getting a bullish breakout. So from here, you're looking for strong support right around 345 to 344, and the retest levels of 340 and our 20 simple moving average at 337. All of these levels are strong support, so you need to watch the price action at those levels and look for the next bullish breakout to be a close above 350. On the Russell 2000, we were up 1% today, and we did get another close back above 207, so we're definitely seeing confirmation of the bullish breakout in the small caps. From here, we'll have critical support right around 204, which is our breakout level, which we already did successfully retest the breakout, and we started to bounce. So the next critical resistance will be a close above 212, and above 212 we should be heading right back into a bull market in the small caps, and we still do have a gap to fill all the way up there at 228. Now to the downside, if we don't hold the breakout of the retest, you're going to break down below 203 and more than likely retest support at 200 or 197, and we still do have a gap to fill at 195.7. So if we do break back down below 203, it's very likely we could come down to fill that gap, so don't completely forget that that gap is there. On the Arkk ETF, we were up 4.67% today, and the Arkk ETF is very close to getting a bullish breakout test, which is going to be that resistance level at 70.5. On a break and close above that level, we should be heading back into a bull market because we will reverse the bear trend and we will have the bullish price action breakout. So above 71, the Arkk ETF is looking a lot more bullish, but you can't forget that we have a gap all the way down here that is likely going to get filled at 54.7, and we're going to have strong support on the way lower right around 62 and the breakout level right around 60.6. So watch those strong support levels because if they do break down, you're looking for the full gap close. On a break above 71, you're looking for the next critical resistance right around 77.6. On the VIX, we were down 2.42% today, and we see the VIX closing below 24 for the third day in a row, and we're continuing to see the VIX getting crushed, which is a bullish development. Remember that the next time the VIX closes below 20, we are more than likely going to be in a sustainable bull rally. So we're getting a very bullish development as the VIX continues to get crushed, but if at any point we see the VIX spiking, that's going to be the pullback you want to pay attention to, and as long as the VIX stays below 30, that will be a buy the dip situation. If we see the VIX spiking back above 30, it's more than likely this was all a bull trap and we are going down for that next leg lower. So the VIX will be a very good indication of whether or not we're going higher from the pullback or we're going to break down and take out the lows. On Bitcoin, we're currently up 3.8% and we see Bitcoin is starting to break out of this previous daily high on a close back above 42,000. We're slowly and surely developing a bull trend, and right now it looks like the possibility that we do have this smaller double bottom, which is countering the double top look because we never had a breakdown below the neckline at 37,000. So we're starting to break the neckline at this double bottom look, which is going to bring us all the way up to 46,000. And by the time we get to 46,000, we'll have confirmation of the bullish breakout above 45,000, which means we're more than likely going to see Bitcoin in a bull market in the very near future, which means Bitcoin could come all the way back up to retest resistance at 51 and 53,000. So Bitcoin is looking very bullish on the daily chart, and we only need to stay above support at 37,000 to continue to make bullish developments. So as long as Bitcoin is above 37,000, I think you need to stay bullish. But if it breaks down below 37,000, look for a retest of support down there at $30,000. On NVDA stock, we were down 0.78% today, and we did see NVIDIA rejecting that very critical resistance level at 267. Remember, the next time NVIDIA breaks out and closes above 267, we will have valid price targets that take us all the way into the low 300s. So I'm not surprised to see bears showing up at this level because they know it's a strong resistance. So right now, if we see a rejection at 267, we could come back down to support right around 248 to 244, 236, or the full gap close at 230. So watch all of those very strong support levels. On a break above 267, you're looking for a breakout above 275, and then we could start to run into the 290s and low 300s. So a break and close above 267 will be extremely bullish. You could see the moving averages are developing a bull trend, which does mean it's more than likely going to be a buy the dip scenario as long as we can stay above 230. On Tesla stock, we had a very bullish day today, going up 7.91% and getting all the way back up to that critical resistance at 996. We got that bullish breakout above 937 and the bulls never look back, driving the price all the way up to the next critical resistance. So from here, if the Tesla bulls can break out above 996, you're looking for a retest of the highs at 1108. That's going to be a very strong push without a pullback, so don't be surprised if we get a pullback from resistance and come back down to retest the breakout at 937, and we still do have strong support at $900. As long as Tesla can stay above $900, it's looking very bullish, so you will want to buy the dip in the event that the price action holds above 900 and starts to get a positive bounce. On Apple stock, we were up 2.08% today, and we see Apple stock did get confirmation of a bullish breakout with the second day in a row back above the 50 EMA and a break and close above 168. So one more day for Apple stock above 168 will confirm it's going back on the bull, and the next bullish breakout will be a close above 170.5. Above there, we'll have resistance right around 173 and 176, with downside support right around 165 to 164 and that critical support level at 162. On the financial sector, we're up 1.62% today, and the financial sector did gap up and close higher for the day, so we do have another gap to fill to the downside. We're getting consecutive closes for 4 days in a row back above the 50 EMA as we slowly and surely develop a bull trend. In the event we get a pullback, look for support at the 50 EMA, the 20 simple moving average, and the full gap close at 37.5. On the industrial sector, we were up 0.55% today, and we continue to see bullish price action in a bullish trend, and we still do have that gap to fill at 106. On the healthcare sector, we are flat on the day, but we still have bullish price action in a bullish trend, and we still have a gap to fill all the way up there at 141. The energy sector was down 0.74% today, but overall we still have a bull trend, we still have bullish price action, so if we can get a breakout back above 76, we could attempt to make a new high. If at any point we lose the support trend line, look for the energy sector to roll over, which overall should be bullish for the rest of the S&P 500 because this money is much better off in other sectors. So jumping back over to the S&P 500, you can clearly see this is a very impulsive bullish rally off the low, so this is not price action you want to completely ignore. More than likely, this is everything we need to go right back into a bull market, so it will be likely you will want to buy the dip at strong support in the event we start to see that pullback. There's no reason to FOMO in at the highs because there's always going to be a better buying opportunity right around the corner. If you're getting FOMO, just ask yourself why you weren't buying at the lows and now you want to buy at the highs. It makes no sense to buy high if you weren't willing to buy low, so follow the price action and wait for the next best buying opportunity if you missed the last one. There's no reason to start chasing now if you missed this rally. Learn something from it and make sure you're better prepared the next time you get the opportunity to buy the dip. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all this market volatility, I think now is the best time to be a bank member. You can find out all the information and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.